Hello, I'm David Atkins, Hammerson's Chief Executive. Well, we've had a really exciting year, culminating in our recent announcement of the acquisition of the Junction Fund. And I'd like to give you an overview of why we believe we're investing shareholders' capital in the right retail locations. We believe that despite the economic backdrop, by investing in the successful areas of retail, we can generate consistent growth in underlying rents, which is, after all, what drives the value of a business like Hammerson's. The three areas which we have targeted are prime shopping centres, convenient retail parks and designer outlet villages. Now, following the February announcement, we worked hard to execute a transaction which saw us dispose of the majority of our London offices this summer, realising well over £550 million to redeploy into those chosen retail areas. Since then, we've invested £100 million into Value Retail, the company which owns and manages Bicester Village, and 8 similar concepts throughout Europe. Bicester has seen tenant sales grow at around 20% every year for the last 5 years, which just shows you how a strong retail category can perform in a tough market if you have the right offer. We invested £135 million into Victoria Quarter in Leeds, which again provides a unique retail opportunity in one of the most wealthy but underserved catchment areas in the country. Adjacent to our Eastgate Quarters development, this will allow us to apply a comprehensive and coordinated approach to the changing retail landscape in this major UK city. We also invested £65 million into the Whitgift Centre in Croydon. Now, this follows our earlier £100 million investment in Central and is a demonstration of our belief that Croydon has the potential to once again become a major retail destination serving the wealthy South London catchment area. And finally, we've just announced the acquisition of the Junction Fund retail park assets for around £250 million. These assets have a number of attractions. They're well let to a diverse mix of high quality tenants. They have low current rents, but with a high proportion of Open A1 consent and significant development opportunities, I'm really confident that Hammerson can increase underlying rents through active management. And we've managed to secure these assets, which materially enhance our earnings per share from day one for a really good price. The acquisition is consistent with our focus strategy and expands Hammerson's presence in the retail park market to 22 assets with a total value of around £1.4 billion. So in summary, we said that we would exit offices to reinvest in the winning areas of retail, and that's exactly what we've done, putting capital to work in prime shopping centres, convenient retail parks and designer outlet villages. The reinvestment will allow us to increase our engagement with retailers and leverage our existing operating platform, so that, in conjunction with existing extension and developments, we can see a clear path to rental growth, which is what gives us confidence in our policy to grow dividends for shareholders.